Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. It's Friday, September 8th, and it's about 7:49 in the morning. The market's not going to gear up to open for another hour and 41 minutes if my math serves me correct this early in the morning. Please don't forget to subscribe to our channel, like our videos, like our YouTube channel, and I've opened up my VIP room for the summer, and I still consider it summer. Please don't hesitate to stop by live at 11 a.m. Link above or below this video. Do not miss out. It's going to be a lot of fun. And it's happening at 11 a.m. And I give a live second part of the market using the analysis here. All right, let's talk about all of this good stuff here. As you can see here, the Nasdaq's down 51 points and the Dow's down 67. For the Dow, this is very random. This isn't really all that much. For the Nasdaq, being down 50 points when the value is only 15,000 is not that great, especially when you consider that if you look at all the morning upgrades, look, DocuSign upgraded, up 3%. Adobe up 1%. That's really good for software stocks. That's a big market cap. Smartsheets up 6%. Smith & Wesson up 9%. Spruce up 8%. First Solar up 2%. And we got Kroger reporting. But the market is down quite a bit. That's not good. That means if these revisions or these guidelines were bad, I mean, look at this. 1 positive, 2 positive, 3 positive, 4 positive, 5 positive, 6 positive, and the futures can't get it up. That's bad. Very, very bad. Now, bond market. I mean, I thought by yesterday the holiday season, if you will, would be behind us, but there's still a lot of people on the sidelines. I mean, look at this. This is like listless. And if you look at the trading volume yesterday on the S&P 500, let me show you this. Not all that great either, below the average. So we're coming back. The volume is definitely coming back, but it's not it's not where it was here or here or here. It's below the average. So we're still below the average. I want to see 1 day above the average. This is a 20-day average, a monthly average. So we're still not up there, not really all that great, and we're below the 50-day moving average. And you could see here, we're not all that far away from the zone, which is now the support, which was the resistance for a while. Looks like we may be coming down there. Also, as far as Fed data, we had productivity and costs yesterday. Unit labor cost. They were expecting 1.7% increase. That's 2.2. If a unit labor costs more than before, that's inflation, folks. That's inflation. Non-farm productivity is a little bit lower, but unit labor costs from 1.7 to 2.2, hey, that's a component of inflation. That's not good. That's bad. So today we have wholesale inventories in Baker Hughes and Consumer Credit. The wholesale inventories is the big one, if you want to call it the big one, but I'm not happy about the productivity and cost. Jobless claims, very resilient, which gives the Fed license to raise rates. If the jobless claims is smaller, not bigger, that's a reason for them to continue raising rates. Because remember what they always say, they're concerned about the resilience of the labor market. Well, it looks like we're in the low 600s. The 4-week average is below the average, which is still kind of low. But this gives them a license to raise rates if they so choose. Let's talk about the global economy, and then I'll give you all the nitty-gritty, and I'll talk about what algo traders have been up to. I think that's the best way to approach today's session because I'm kind of all over the place. S&P 500 Nasdaq closed in the red as tech stocks dropped over concerns of Apple. China, man, oh man, China's at it again. But I think this report got overblasted. Apple really dropped hard yesterday. And the problem is only about 500,000, China only has 500,000 private employees or public employees. So that's not that many. It's like 0.5%. It's really a nothing burger. But again, the question is, what impact will it have in the future? Will it have impact on other stocks? Will it have impact? Is this just the first step in China's relationship with Apple in the U.S.? It's not a friendly gesture. So that's the big problem. So let's see, Apple dropped over 2%, which is big for Apple. I was expecting the market to drop more, but Apple really did. China's intention to broaden the iPhone ban to encompass government-backed agencies and state companies. There's just not all that many of them. Shares of Apple lost ground. Skyworks, Qualcomm lost more than 7%. This is not good for chip companies either. Labor Department on Thursday reported that unemployment benefits fell to 216,000, stronger than expected. 234, which is good, which further supports the notion of the Federal Reserve holding rates higher for longer. Yeah, if the economy is moving, they don't need to do anything. Remember, the best case scenario is them raising rates and unemployment getting better, right? I mean, what's better than that? Or decreasing, not increasing. John Williams said Thursday that monetary policy is in a good place, but policymakers will need to be careful to determine the appropriate course of action regarding interest rates. I don't think we're in a good place right now, especially with China. Goolsbee stated the debate with the Fed is very rapidly approaching the time when our argument is not going to be about how high should the rates go. What the hell does that mean? Very rapidly approaching the time when our argument is not going to be about high. Okay, I mean, life is hard as it is. Why not just be straight up and just say that we're probably going to start lowering or we may not raise for a while? Just be straight up. This is just too confusing. I mean, dude, come on, get it straight. There's only a 7% chance that Fed is going to raise rates this month. FOMC, 41% chance. I think they are going to raise rates, but I think a lot can happen between now and November. We got 2.5 months, or actually almost 3 months. Yeah, 2 weeks, 2 months and 3. Yeah, 2.5 months. We got wholesale inventories today, not a huge report. I think next week the market's going to start out really, really active. I don't want to say strong, but active. I think all the investors who were out this week playing hooky are going to be back by next week. Europe is keying off of U.S. They're not happy about China either. Gains and headed for an 8th straight day of losses. Chemical stocks and construction stocks are leading the market lower. Yeah, construction stocks. Interest rates going up is not good for construction stocks. China closed lower, extending following losses following series of disappointing economic readings. This is bad for the U.S. This puts a lot of pressure on the U.S. Japan closed lower, concerns over the Federal Reserve and China and the stupid iPhone ban. I mean, really, come on, guys. Are you children? I mean, there's also data that shows Japan economy grew less than initially estimated. It's time to raise interest rates in Japan. All of these stocks got really good upgrades. I'm hoping the market can overcome Apple today. If we look at Apple, let's see, Nasdaq is down, which means Apple's probably down. Yeah, down just a little bit. So here's the deal. Look at volume on Apple. If Apple can trade above 178, we can get a really nice rally. And you know what I think? I think Apple's going to trade. I think this news is way overdone. We have a nice little reversal here, and we have a nice support at this level. First tier support, second tier support is 200-day moving average. I genuinely think we're going to come up and start filling this gap. I do. I think this is way overdone. And Apple is still one of the biggest companies in the world. As I mentioned before, the SPY is not doing so great, but we're below the 50-day, but we're still not at this support level. QQQ, I think, is right at the 50-day. Let's see if it's below or right at it. Slightly below, touching it maybe. But I think today with Apple, we may see some upside. Russell 2000, this is not good. Right at the 200-day moving average. Volume higher than usual, a little bit higher than usual, even in holidays, not so good. So let me tell you where the algos have been hitting this week really hard. And remember, this week so far has only had 3 days, and 2 of them were really holiday days. So let's be realistic here. But one of the areas that they're really hitting hard is the mid caps. They're hitting the mid caps really hard. Don't know what that's all about, but mid caps are always kind of not here, not there. They're hitting technology really hard. Thank you, Apple. Really hard. They're hitting consumer retail stocks really hard. Really hard. I like the consumer discretionary rallied yesterday. That's a really good sign. Let's see what else they've been hitting really hard. The small caps, mid caps, tech, and small caps, mid caps, technology is pretty much it. And technology because of Apple. They haven't really been hitting anything hard. It seems like the algos have been on the holidays as well. So there's just not much action right now. If you look at the Dow Jones, we're below the 50-day moving average. And I don't think technology is going to help this sector very much. If you look at it on a relative strength basis, let's just go over the last 3 weeks, you could see retail, that's the Dow. Consumer staples, that's the Dow. Healthcare, that's the Dow. Utilities, that's the Dow. Home builders, that's the Dow. Industrial, that's the Dow. Oh, look at the Dow. It's right here. So you could see this is very consistent. Financial have been outperforming. Communication services have been outperforming. Basic materials have been outperforming, even though we had a short on it that we just closed. Real estate has been outperforming. The S&P is up here. So why is the S&P above the Dow? Because technology, energy, technology, and there's a lot of technology in S&P 500. Consumer discretionary, all of these sectors, that's where the money is right now. Now, would I be putting my money in technology right now? Well, I would if Apple fills this gap. If Apple goes above 178.70, 178.65, I would definitely buy technology right now. But if you want to stay away from that and still get some upside, the consumer discretionary, XLY is not looking bad, or just go with the QQQ. But the money right now is in energy and technology and consumer discretionary. That's where the money is flowing into right now. And that's one of the reasons why we bought SLB for one of our programs. Just want to show you the trend. Above the 8-day moving average, above the 50, above the 200, breaking new highs, volume higher than average, and Oracle. We have an Oracle in one of our services. Above the moving average, higher than average volume, above the 200 and above the 50. And if it breaks out here, holy moly, there's nothing above that level. So again, that's where I'm at right now. Folks, this week is a very, very strange week because of the holidays. It's very hard to gauge the market based on when half the traders are not there, okay? There's no day trading stocks today because market was really muted overnight. I'll give you all the goodies. If there is something really breaking out, I'll give it to you in the VIP room, which is happening at 11 a.m. in a couple of hours. Don't miss out. Now, keep your eye on the bond market. If the bond market breaks down right here, and if it breaks down, the fact that we had low volume on this the last few days is really positive, really positive. But if we break down further here, it's going to be very, very bad for technology aside from Apple, and it's going to put more and more pressure, and it's going to increase the odds that the Fed is going to raise rates in November, directly increase those odds. If this goes up, it's a reverse story. So keep your eye on the bond market, especially today, because I think by today, the stay-at-home crowd from the holidays will be back. All right. Well, the market is still in a historically weak September. Amazon could be setting up for a big move next week based on seasonality. One theory behind the market's traditional weakness is that a lot of traders and investors start making wholesale changes to their portfolios after the summer slowdown period, which makes sense. They adjusted in the fall. I'm going live today at 1 p.m. Eastern Time to cover this trend, historic seasonality, and how I'm going to play it. It's happening at 1 p.m. today. Click the link below, check it out, go over a new trade opportunity ahead of the weekend, and I'll see you later. Subscribe to my YouTube channel. It's Roger-Scott YouTube channel. Subscribe to our Telegram channel. Just go to rogerscott.com/Telegram. Send me an email at roger@rogerscott.com. And I'll see you at 1 p.m. today and 11 a.m. in my VIP room. Link above or below this video. Bye. Have a great weekend. If you guys have any questions, post links below this video and I'll respond. Or send me an email, support@MarketGeeks or roger@rogerscott.com. It'll get to the same place. Bye.